Okay, let's get started. But first, just a quick but really important reminder. Everything we're about to discuss is for your information and reference only. It is absolutely not a recommendation to buy or sell any particular stock. Ultimately, all investment decisions and the responsibility that comes with them are yours and yours alone. All right, let's dive in. So, it's 2026, and the Korean stock market, the KOSPI, has just done something incredible. It's smashed through a ceiling many thought was made of concrete. But you know how it is. Every time we hit these incredible new highs, that same old question pops up. Are we looking at the beginning of a whole new era, or are we standing at the very peak of a bubble about to burst? Today, we are going to unpack exactly what's going on. Just take a moment to look at that number, 5,400. For years and years, this felt like a fantasy for the KSP. But here we are, it's real. And breaking this level, well, it's more than just a win for morale. It's a signal, a big one, that something fundamental might be changing in how the entire world values Korean companies. And that brings us right to the heart of it, doesn't it? Is this rally built on a rock-solid foundation, a true structural change? Or is this just a classic frenzy, a party fueled by cheap money that's about to end with a nasty hangover? I'll tell you, in my 20 years in this game, I've learned the answer is never simple. But the clues are always there if you know where to look. So, here's our game plan. We'll start by tackling that bubble question head-on. Then we're going to dig into the three massive forces that are pulling foreign money into Korea. We'll look at the government's big push to finally get rid of the Korea discount, explore why Korean AI chips are king, and then we'll follow the money to see where it's actually going this week. And you'll definitely want to stick around till the end because I'm going to share my personal playbook for how to navigate 2026. All right, let's get into the thick of it. My core argument is this. KSOP 5,400 isn't just a random number. I believe it represents a deep, structural shift in the Korean market. This is not the same market I saw during the dot-com bust or the 2008 meltdown. The very nature of the capital, the kind of money that's coming in, has changed. And to really get what's happening, you have to understand that there are three powerful engines all firing at the same time. You've got the global economic picture, huge policy reforms happening right here in Korea, and a new almost automatic pipeline of cash flowing in. Let's break down each one. First things first, the global money tab. This chart tells the whole story of the US Federal Reserve. After jacking up rates like crazy through 2023, they've slammed it in reverse. Those rate cuts you see starting in late 2024, that's basically the Fed opening the floodgates. There's so much cash sloshing around the system now, and investors are desperately hunting for growth, which is leading them right to Korea's doorstep. Now here's where it gets really juicy for foreign investors. All those Fed rate cuts, they've hammered the US dollar. Just look at the DXY index here. It's taken a serious nosedive. Now, if you're an investor sitting in New York or London, this is a beautiful thing. It means you get a double dip. You're not just betting on Korean stocks going up, you're also betting on the Korean won getting stronger. It's like winning the same bet twice. Okay, this right here is a massive game changer. Starting this past April, Korean government bonds are finally being included in the World Government Bond Index. Now, this isn't just some fancy club. This means that massive global funds, I'm talking about the gigantic pension funds that manage trillions of dollars, are now forced to buy Korean bonds to balance their portfolios. Look at the numbers here. We're talking about an estimated $56 billion waterfall of stable long-term money flooding in. This isn't hot speculative money. This is sticky capital that builds a solid floor under the entire market. All right, let's shift gears to our second driver, and this one's all homegrown. For as long as I can remember, Korean stocks have been stubbornly cheap compared to the rest of the world. It's called the Korea discount, and it's mostly been about terrible corporate governance. But now, the government's Corporate Value Up program is finally tackling this problem head on. And believe me, it's a big deal. The program is a three-pronged attack. First, and this is huge, a legal change making it clear that company directors have a duty to all shareholders, not just the founding family. That's a massive win for regular investors. Second, they're using the carrot and stick of tax incentives to push companies to pay out more dividends. For years, these companies just sat on mountains of cash. Now they have to share it. And finally, mandatory English disclosures. This is so simple, but it rips down a huge wall for foreign investors who are basically flying blind. It's all about creating trust and transparency. And now for our third driver. The one that I think has the most explosive potential of all, technology. The entire AI revolution, the whole shebang, runs on a new kind of super powerful memory chip. And when it comes to making those chips, Korea isn't just in the game, Korea is the game. Let's get specific. Just look at this comparison. Samsung just announced they're shipping HBM4, the next generation of high bandwidth memory. The specs are just mind-blowing. We're talking almost 3 times the bandwidth and a 40% improvement in energy efficiency over the last model. In the race for AI dominance, that's not just an improvement, that's a whole new lap. And here's the proof in the pudding. This isn't just some company press release fluff. Bloomberg is reporting that this exact tech, HBM4, is a critical, non-negotiable part of NVIDIA's next-generation AI architecture. Think about what that means. To build the future of AI, you have to buy your parts from Korea. That is an unbelievable competitive moat and a guaranteed fire hose of demand for years to come. So we've got global cash, domestic reform, and tech leadership. We know why the money is here, but the real question is, where is that money going right now? This is where things get really practical, because if you can see the rotation, you can navigate this market. This chart tells such an interesting story. See that big chunk for semiconductors? Foreigners are actually selling a bit, taking some well-earned profits off the table. But the key is to see where that money is rotating into. It's pouring into financials, shipbuilding, even automotive. This isn't panic selling, it's smart rebalancing. This is the sign of a healthy bull market that's getting broader and stronger, not a bubble getting ready to pop. And here are the names to prove it. You see the big banks, KB and Shinhan Financial? They're the most obvious beneficiaries of that value-up program and its focus on dividends. Then you see the old-school industrial giants, like Hyundai Heavy and Hyundai Motor. These are classic value stocks that have been ignored for ages. The smart foreign money is digging for bargains. And on the other side of the coin, you see them trimming the big tech winners that have had an amazing run, like Samsung and SK Hynix. This is just good portfolio management. It reminds me of what I was doing back in 2022, just rebalancing the portfolio. You have to trim your winners sometimes. It's not a red flag, it's a sign of discipline. Okay, time to bring it all home. Let's put everything we've talked about into an actual actionable playbook. With the KOSPI way up here at 5,400, how should we be thinking about this market? We'll look at valuation, talk strategy, and I'll give you my personal take based on a couple of decades of scar tissue. So, the million-dollar question. After this historic run, is the Korean market just too expensive? Well, this table gives us a pretty clear answer. Look at the KOSPI's price-to-book ratio, just 1.67. Now compare that to the US market, which is over 5, or even Japan at 2.57. It's not even in the same ballpark. What this tells me is that even after hitting a new record, the Korean market is still dirt cheap compared to its peers. There's plenty of room to run. So here's my final verdict. Having lived through the IMF crisis, the dot-com implosion, the 2008 financial crisis, and the pandemic, my gut and all the data are telling me the exact same thing. This is not a bubble. This is a fundamental, long overdue repricing of an entire country's stock market. So how do you actually play this? I'm sticking to 3 simple rules. First, buy the dips, don't chase the rips. Be patient. Let the market pull back to a support level, maybe around 5,200, before you add. Second, build a barbell portfolio. You want exposure to that explosive AI growth on one side, but you balance it with those steady, value-oriented financial and industrial stocks on the other. It's the best of both worlds. And third, keep an eye on the US dollar. If that DXY index starts creeping back up over 98.80, it's a sign to maybe pump the brakes a little in the short term. At the end of the day, if there's one thing I've learned, is that the stock market is an arena of survival. It's not about being the smartest guy in the room all the time. It's about making smart choices that let you survive to play another day. I really hope this breakdown of this historic moment for the KSP was useful for you. If you learned something today, I'd really appreciate it if you'd hit that subscribe button and turn on notifications. We've got more deep dives coming your way. Until next time, stay sharp and invest wisely.